prepared something pretty awesome for you. We'll break down 3 funding rate arbitrage cases with pure profit, where to find such setups, how to calculate profits, and what risks to consider. I'll walk you through each step. But first, a quick tip: how to get the most out of funding rates. If you're using, say, 5x leverage, a stable funding rate can earn you 5 times more with the same deposit. But it's important not to chase the maximum leverage, as the risk management is key and liquidation is no joke. Before we dive into the case studies, let's quickly go over what funding rates are. It's a fee you either receive or pay for holding leveraged positions. When the rate is positive, you earn. When it's negative, you pay. This mechanism lets you earn even in sideways markets where price barely moves. Most importantly, funding rate arbitrage is one of the most stable and predictable opportunities out there. You don't need to guess the market direction. You just capture the difference in rates between exchanges. These setups appear daily, and if you have a tool like Arbitrage Scanner, you can build a nearly passive strategy, running almost on autopilot. Let's jump into the first case. The first pair is BitGet and LBank. Only 15 minutes left until the next funding payout. Looking at the rate on BitGet, it's minus 0.59%, and on LBank, it's plus 0.01%. The difference seems small, but with leverage, it still turns into profit. Leverage used 5x. This means your profits are multiplied by 5. We open positions with 5,000 coins on each exchange using market orders. Total positions reached 25,000 coins per exchange. On LBank, we got $1.87 in funding, while on BitGet, 91. Huge difference. And that's the power of funding rates. Same coin, but different rates bring solid profits. Now we close positions. 10,000 coins on each side. Liquidity is fine, no issues. After closing, the net profit is $90. A real-world example of how funding arbitrage can generate income, with proper liquidity assessment and the right exchanges. Moving to the second case. This time it's Binance and LBank. We open a short on 10,000 coins with 5x leverage. According to the strategy, we scale the position up to 30,000 coins on both exchanges. Only 40 seconds to funding. The Binance rate changed slightly to minus 0.49%, but that's fine, we proceed. Now the payouts. On Binance, $146. On LBank, a small loss of minus $47. Everything is on track and our client waits for the prices to converge to lock in profit. Result: Binance plus $176, LBank minus $47. After accounting for $24 in fees, the net profit is $105. Now let's look at VTHO token, working with BitGet and LBank. Funding rates are more attractive here. On BitGet, minus 1.52%, and on LBank, minus 0.2%. 13 minutes left before funding payout. Enough time to open positions. 4x leverage. We open positions of 300,000 coins with market orders. We're working with large volumes now, but it doesn't stop here. 10 minutes before the funding payout, our client decides to go aggressive, opening 500,000 coins. This can lead to better profit, but also increases risk. Also, note that some exchanges may block new positions just before funding, so speed is key. Here's another 130,000 coins, bringing the total position to 2.83 million coins across both exchanges. Then comes the funding payout. On BitGet, $244. On LBank, small loss, minus $33.9. The difference in results is due to funding rates and liquidity. Positions are closed in 2 stages, 50% at a time to minimize risk. Net profit is $215. A great case with high volume and solid strategy. Now let's briefly touch on psychology of arbitrage. Crypto arbitrage, especially funding based, is not just a technical process but a psychological one. It's often tough not to act emotionally, especially when rates fluctuate or when market liquidity is tight. Remember, successful arbitrage isn't about chasing quick profit, but about long-term strategy, grounded in clear rules and risk management. Psychological pressure also shows up when closing positions. For instance, sometimes we close too early out of fear, missing potential gain, or we hold too long and risk everything in volatile markets. That's why it's critical to monitor your actions and stick to your predefined strategy. As you can see, a funding rate arbitrage is not only a stable way to earn, but a low-risk method to grow your capital. You just need to watch the rate, evaluate liquidity, and don't forget about fees. Even in minimal market movement, there's money to be made. Arbitrage Scanner helps you quickly find these setups. Just filter by rate and time until funding and start building your strategy today. If you want to try it yourself, there's a free trial link to Arbitrage Scanner in the description. Check it out and see how easy it can be to find your first profitable trade. This was me, Michael. See you next time.